Welcome back to Investing Talk Podcast.
Today, we're looking at MicroStrategy.
As usual, before we start, subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When you look at MicroStrategy today, you have to approach it with kind of a dual lens.
Right. It's two companies in one, almost.
Exactly. Historically, it's an enterprise software company, pretty solid in its niche. It's still generating, about $116 million in revenue as of Q3 2025.
But that's not the real story here, is it? That legacy business feels more like an engine block for a rocket ship that's pointed in a totally different direction.
That's a great way to put it. That direction is, of course, Bitcoin.
And the scale of that transformation is it's what demands this kind of analysis. It's the wow factor. They hold a truly staggering amount, over 640,000 BTC now.
It is. And at that level, you're right. They're fundamentally not valued as a software company anymore.
No way. They've successfully positioned themselves as a de facto, publicly traded Bitcoin bank.
They really have. And that operational software business, while it seems small in comparison, it serves a really crucial role.
It provides the foundation.
It provides the foundational cash flow, the stability, and the legal structure that lets them execute this unique leveraged strategy. It's what keeps the lights on while the treasury strategy fuels the growth.
Okay, so let's talk about that strategic fuel. It's often called the Bitcoin treasury model, but the secret sauce seems to be this strategy of just constant accumulation.
Right.
Analysts call it the procyclical leverage flywheel. Can you break down what that truly means for our listeners?
Sure. It's essentially a feedback loop that's fueled by, market optimism. When the price of Bitcoin rises, MicroStrategy's stock price tends to increase even faster.
Because of the leverage baked in.
Exactly, because of the leverage.
Yeah.
They then capitalize on that elevated stock price by continuously generating perpetual capital.
Through things like their ATM programs or debt.
That's right, either through those targeted equity issues, the at-the-market programs, or through debt raises. And that fresh capital is then immediately deployed to aggressively acquire more Bitcoin.
So wait, if I buy their stock, I'm sort of funding the purchase of the underlying asset I want exposure to in the first place.
In a way, yes.
That positions them for what's called a leveraged beta greater than 1 to Bitcoin's price moves, right? So if Bitcoin moves 10%, MicroStrategy could, in theory, move 15%.
That's the key attraction for certain investors, and they are executing this loop aggressively. We've seen very recent examples like the purchase of 220 BTC for $27.2 million.
And there was another one too.
Yes, another 850 BTC for nearly $100 million. Both of those use those at-the-market programs.
And just to clarify for everyone listening, an ATM program is really just a structured way for a company to sell new shares directly into the market over time, not in one big chunk.
Correct. And they're not slowing down. Their public target, and this figure really tells you everything about their ambition, is to hold $84 billion worth of BTC by 2027.
$84 billion.
Wow. That's the goal. And that level of commitment and constant leveraging leads us right to the core concern we have to talk about: volatility.
It has to. When you look at their earnings reports, it's unlike almost any other public company. What's the real impact of having a massive crypto treasury on the balance sheet?
It seems like a recipe for constant financial whiplash.
It is. It really is. The accounting rules require them to mark their crypto assets to fair value every quarter.
Which creates these huge swings. Massive swings. It puts enormous pressure on their stated profit margins, and it often renders the traditional GAAP earnings figures almost meaningless for short-term analysis.
And we saw this recently, right, with that huge unrealized loss.
We did. It was starkly reflected in their recent significant unrealized crypto loss, a $5.91 billion accounting hit.
$5.91 billion. That's just an almost unimaginable number for an accounting loss.
And that volatility is so extreme that their guidance for fiscal year 2025 net income is just incredibly wide. It ranges from a loss of $5.5 billion to a gain of $6.3 billion.
That's an $11.8 billion spread.
An $11.8 billion spread that is almost entirely a function of where Bitcoin happens to be trading on December 31st.
That's incredible. And that range, it's based on analysts' Bitcoin price assumptions, which are currently between, 85 and 110,000 per coin.
Exactly. And to put that in context, very few large established corporations give guidance ranges that large.
Right.
For most companies, a swing of even $1 billion would signal catastrophic instability.
Here, it's just business as usual.
It is.
So how is that sustainable? How does management mitigate the risk of a sudden, sharp downturn, a severe crypto winter that could compromise the very debt structure they use to buy all this? It sounds like a
Hmm.
house of cards.
That's a sharp question. And management has been extremely deliberate about building a safety net. Despite the aggressive buying, they recently established a $1.44 billion USD reserve.
Okay, a reserve. And crucially, this was funded with an equity issuance, right? Which dilutes shareholders but gives them a
A
buffer.
massive buffer, yeah.
And what's the purpose of that massive reserve?
It's their insurance policy.
Hmm.
It's designed to cover over 12 months of all their corporate debt interests and their dividends without needing to sell a single Satoshi of their Bitcoin.
So they can ride out a storm?
It means that if Bitcoin drops and stays low for a full year, they can service their obligations and wait out the cycle. They won't be forced to liquidate their core asset at the bottom. It's a very smart use of capital.
That resilience brings us to the next point then. Why buy MicroStrategy instead of just buying Bitcoin through a spot ETF or an exchange? If the volatility is that high, what's the edge?
The competitive moat is its structure and its liquidity. For institutional investors, especially those looking for exposure in traditional markets, MicroStrategy's model is often seen as a superior, liquid alternative to, say, private equity.
Why is that?
Because private equity often comes with what's known as 2 and 20 fees,
The classic 2% management fee and 20% of the profit.
which is punitive and very expensive. MicroStrategy is a publicly traded, highly liquid stock that offers similar, if not greater leverage to the asset without those massive fees.
And that model has been pretty influential.
Over 200 corporate entities have been inspired to look at adding Bitcoin to their own treasuries using a similar framework.
Okay, that makes a lot of sense. Shifting gears a bit, let's look at how the market is actually reacting to this. Given the wild swings, have we established any kind of technical floor for the stock?
We've seen some signs that suggest accumulation is underway. We had a noticeable price bounce back on November 26th.
That was fueled by short covering, right?
Largely, yes. And that action helped form potential higher lows, settling right around the $171 support mark.
So, technically speaking, what does that look like?
Well, this consolidation is being interpreted as a potential cup and handle setup, which is, a bullish continuation pattern.
But for that pattern to actually validate and start the next leg up, what does the core asset Bitcoin need to do?
Bitcoin needs to stabilize, and it needs to do it firmly above that $85,000 level for the pattern to hold for MicroStrategy.
Okay, and if we're just looking at the stocks chart, what's the key support range?
The key support range is between 150 and 171. And this range became particularly attractive recently because the stock's market adjusted net asset value, or MNAV, temporarily dipped below the actual value of its Bitcoin holdings.
That phrase, MNAV, is crucial here. Can you quickly clarify for the audience what MNAV is and why dipping below it signals an opportunity?
Absolutely. The MNAV is essentially the sum total of the market value of all their Bitcoin, plus the value of their software business, minus any outstanding debt.
So it's the real underlying value.
Yes. And when the stock price trades below that figure, meaning the market is valuing the company at less than its net assets, it creates a rare mathematical arbitrage opportunity. The fact that this happened suggests the stock became severely oversold due to fear.
And what are the moving averages telling us?
Well, looking at the 50-day and 200-day, they both suggest the stock is in a broad accumulation phase, especially after that punishing 49.3% decline in 2025.
We also got a major institutional signal recently that really cemented that accumulation narrative. It involved a famous short seller.
It's a huge indicator for sentiment. The iconic short seller Jim Chanos officially closed his long-held short position on the stock on November 26th.
Which coincided perfectly with that technical bounce.
Perfectly. I mean, when a seasoned bear capitulates, it often signals the bottom is in. On top of that, the MCD indicator is signaling constructive momentum, and the company diversified $5.1 billion of their Bitcoin custody over to Fidelity, which adds institutional confidence.
Okay, but despite these technical floors and the short sellers giving up, the immediate market sentiment is still heavily bearish. I think it's averaging around negative 0.3. What are the major non-crypto clouds hanging over the company right now?
The negativity is being driven by two very serious but possibly transient risks. First, you have the ongoing class action lawsuits.
Right, the ones alleging misleading statements about the Bitcoin strategy and the losses.
Exactly. They create a legal overhang, and the deadline for those claims is July 15th, 2025.
That's a significant distraction and cost for the business. What's the second major risk?
The second is maybe more pressing for institutional money, the MSCI index exclusion risk. The potential deadline for that is around January 15th, 2026.
And that's huge, because if you're in an index like MSCI, billions from passive funds are forced to own your stock.
And if they get excluded, those funds would be forced to sell. That would cause immediate, potentially catastrophic downward pressure. It would also really compromise their ability to raise capital cheaply.
So lawsuits and the risk of being booted from a major index, that's a potent combination of bad news. The stock is already down a crushing 67% from its highs.
It is.
So is there a case to be made that the market has already fully priced all this in?
That is the core debate right now. I mean, we saw an 11% drop on December 1st just from a broader crypto slide, but the price action since the lawsuit news suggests a lot of that structural fear is already absorbed.
So the bull case is that the 67% decline has already discounted the worst case scenarios for both the lawsuits and the index risk.
That's the argument. And if either or both of those risks just dissipate, the upside could be immediate and huge.
Let's look forward then. What should people be circling on their calendars? What near-term events could act as catalysts and maybe swing this sentiment?
The near-term calendar is pretty busy. First, we have Q4 2025 earnings, expected in late February 2026. That report will be critical.
What are we looking for there?
We are looking for updates on their Bitcoin KPIs, how many more coins they accumulated, and any revision to that massive $85,000 to $110,000 Bitcoin price assumption range.
Okay, and beyond that backward-looking report, is there a forward-looking strategy reveal coming up?
Yes, immediately after earnings.
Yep.
From February 23rd to the 26th, they host their Strategy World 2026 conference.
And that's a big deal for them.
Historically, that's where leadership announces major treasury strategy reveals, new financing mechanisms, potential partnerships. That event could move the stock independent of Bitcoin's price.
And then there's the macro environment, which is always a huge factor for risk on assets like this.
Absolutely. The potential for Fed rate cuts remains the biggest macro tailwind out there. If the Fed pivots to an easing cycle, that typically favors higher risk, higher beta investments.
Like MicroStrategy and the whole crypto sector.
Exactly. And given that Bitcoin has been stabilizing through 2025, a shift in monetary policy could really provide the propulsion it needs.
Okay, let's synthesize all this. If you had to distill the core investment thesis for someone listening right now, balancing the high risk with this extreme valuation drop, what's the elevator pitch?
The core thesis is this. The extreme 67% price crush was driven by transient company-specific risks, the lawsuits, and the potential MSCI exclusion.
Okay.
This massive decline has created a rare entry point, one that's below the mathematical value of their underlying Bitcoin holdings.
So you're buying the assets for less than they're worth.
Essentially. And because of their unique leverage structure, a return to normalcy and a broader crypto market recovery positions this stock for multi-bagger upside. For someone looking for maximum leverage and liquidity in the space, it really does remain the premier proxy for direct Bitcoin exposure on the market.
And here's where it gets really interesting for anyone considering this. This is fundamentally not a quarterly trade, is it? This investment is tied directly to the multi-year crypto cycle. The target horizon here has to be a multi-year hold, tying into the next major Bitcoin cycle peak. The question for you as an investor isn't just whether Bitcoin will go up, it's whether the benefit of that leveraged beta and the massive upside potential is worth carrying the inherent business execution risk, the legal risk, and that mind-boggling $11.8 billion volatility range that comes with this specific structure. It's something to really mull over as you think about how you want to access the next crypto rally.
We appreciate you tuning in for this look at MicroStrategy. Make sure you subscribe to the podcast to catch our next deep analysis.